Alrighty, folks, welcome aboard. Welcome aboard. Today, auction market theory. I am Marziti, your host here, a member of the Bullish Bears and trading community. And we're going to talk a little bit about auction market theory here and see what we can learn from it. Let's go ahead and get started here. Disclaimer in the legal here. This is a presentation that I personally created. I am not a financial advisor. The video is for educational purposes only. I'm only a member of the Bullish Bears community. I'm not a moderator or owner or anything like that. What I say here does not necessarily represent their opinions. You're fully responsible for your own trades, and you're welcome to copy and redistribute the video as much as you like, so long as the author, me, Marziti, is given credit. All right. So let's start with a little story. Okay, so there were these bears that had a nice little cottage out in the woods. There was Papa Bear, Mama Bear, and little baby bear. Well, Mama Bear made up a big pot of porridge, and you can kind of think of it like oatmeal. Anyway, all right, fine. So it was all hot. She'd made it up. It was still, on the stove there. It was all hot. So they divvied it out into bowls. There was a bowl for Papa Bear, Mama Bear, Baby Bear. And they said, you know what, while this cools off, let's go take a walk. So they go out and they take a walk. Well, and they leave the house. Well, along comes this little brat, irreverent little girl called Goldilocks. And I say brat, irreverent, because she's just happily skipping through the forest and she sees this house and she goes in it and there finds that there's no one home. Well, she sees that there's dinner sitting or supper or whatever sitting on the table and she decides to, well, I'm kind of hungry. And she's just, so she goes up and she goes to Papa Bear's bowl and she grabs the spoon and she takes a bite and she's like, oh my gosh, this is cold. This is terribly cold. Well, she goes over to Mama Bear's bowl and she takes the spoon and she takes a bite and she's like, too hot, too hot, too hot. And then she goes to the third little bowl, which is little baby bear's bowl, and she takes a spoon of that and she puts it in her mouth. It's like, oh, this is perfect. And so she commences to eat and eat and eat. And before all is said and done, she has eaten all of little baby bear's porridge. How rude. Anyway, she's tired. Now she's just eaten this huge bowl of porridge and she's tired and she sees the couch and so she goes down and she falls asleep on the couch and she goes, sound asleep, sound asleep. Well, in the meantime, the three bears come home and they see their table has been disturbed, their food has been disturbed. And then they look over there and they see Goldilocks sleeping on their couch. So what do? Well, they eat her. Right? They eat her. Well, no, maybe not. I don't know. Anyway, the point was, is that it was too hot, it was too cold, it was just right. And that's the important part of our little story here. Let's pick a different one here. Let's talk about going to the grocery store. And maybe we are looking for some pinto beans. Yeah, some pinto beans. Pinto beans, good for your heart. The more you eat, the more you... Never mind. Anyway, so we know that when we go to the grocery store, there's all kinds of different brands. We go up to the pinto bean part there, and there's all kinds of different brands of pinto beans. Well, some of them are going to be from fancy, manufacturers, producers, whatever. And let's say that can of pinto beans cost $1.50. Okay? And somebody looks at that and says, that's too high. I'm not paying that. Well, then they look over here. Well, here's the absolute off-brand knockoffs, and they're at 75 cents. And they're like, good price, good price. But the normal, maybe, the normal brand that most people buy of pinto beans is $1. So we've got too high, I'm not paying that. Now, too low, we always, of course, love to get a discount, but there comes a point where the sellers are going to say, I'm not going any lower. I got to make some money here. So that 75-cent can, they say, well, no, I'm not going to do 70. I'm not going to do 65. 75 is as low as I'm going to go. And when the shelf is cleared off of that, well, that's it. And so we end up most of the time, though, buying the retail average price of $1. Okay? So again, too high, on sale, or average. So what is auction market theory? What we're going to do here is we're going to look at the historical volume by price. It's important to note that we're talking about price, not time. Most of the time, we're used to looking at price by volume, rather, by time. Well, in auction market theory, as I'll show you in a moment, we're going to look at it by price instead. And what we're trying to do is identify areas where the price was considered to be too high, not paying that, and it rejects. Too low, and the sellers are like, no lower, not going to do it. And then there is the just right, or what we'll call the retail. And we're going to call a lot of these different areas, we're going to talk about a lot of things called volume nodes. So, let's kind of get on with it here, and let's just actually... We're going to have quite some charts here coming up, and at the end, actually, I'm going to do a live markup of a chart here. So, why auction market theory? Well, it's similar to other trading styles in some ways. Of course, all trading styles, you can come up with 50 different trading styles, and they will have certain things in common with other trading styles. This is normal. They may call it something different, but again, normal. What is nice about auction market theory is the entries are made at very specific points. The stops are at very specific points. And we have oftentimes multiple exit points. And we know these in advance usually. Not saying that a trade always goes to an exit point, but we have a target, if you will. Is it better than anything else? No. Auction market theory is not better than Jeremy's fan lines or Kevin's supply and demand or Creed's conversation areas and or however, all that kind of different thing. No. Everybody specializes in their trading style, and all these trading styles work. But we'll all find that individually somebody or a type of trading style relates to you, the individual, more so than somebody else. In other words, some people are going to really gravitate towards Kevin's supply and demand. They're just going to do that. They like it. It makes more sense to them. Other people may go to Jeremy's idea of fan lines and diamonds, and that makes more sense to them. It's not saying one's better than another, it's just different. Auction market theory is the same way. It's different, and it may appeal to you, it may not. You'll have to try it out a little bit to see. Here is an actual chart from Bookmap. Now, I've turned off a lot of the indicators because it was so busy. It was really, really busy. But let's just kind of identify a couple things on this chart. First of all, right here was market open, right there. So we got market open right there. This yellow line is called the volume point of control, or VPOC. Now, what does that mean? That means that, let's just kind of look at this VPOC right here, just, whatever, it's outside a little bit. Well, you know what, let's go to this one. What this one is saying is that during this period of time, of the entire day leading up to it, obviously you can't see the future. So from here back, this area was the price over here, somewhere around 80 maybe, 20,080. That was the price where more transactions took place than anywhere else. More transactions took place at this price than anywhere else. Now, later on, more transactions took place here, and this was great. There were more transactions than here. And then this had more transactions than here, or any of this before it. So what we are seeing as the VPOC moves throughout the day, we're finding out what the market considers to be the fair price, the retail, what they're willing to pay. We are interested in watching how it steps. So we notice a step up, a step up, a step up, a couple steps down, a step up, and then we kind of step down and go sideways, right? This is, kind of obvious just looking at the chart as well. But VPOC tells us at that moment for this day, for this session, this is where more trades have taken place than any other price. And that's why we talk about it, it's volume by price. Whereas this down here is all volume by time. Right? This is what we're so used to seeing here. But this is the same idea, except it's by price instead of by time. Okay. So let's bear that in mind. Let's continue on talking about what's on this chart. Now, this is not a Bookmap tutorial. Kevin has done a gazillion of those, and they're all over the internet, so I'm not going to do that so much here. This purple line for me is VWAP, Volume Weighted Average Price. It is a cousin to VPOC. They're similar. They're both based on volume and price. All right. Now, if you're not really familiar with Bookmap, let me just, let's see. Let's just zoom in a little bit here. Okay. These areas, like right here, represent, in this case, since this line is below price, this would be limit orders on the book, resting orders. And in this case, since they are below price, these would obviously be buy orders. If price comes down here, they're going to buy it and buy it and buy it. The more intense the color, from blue to red, the more orders there are. Okay? Looking at these bubbles here, big red bubbles mean there were more sells than buys for that moment. The bigger the bubble, the more selling. Again, now here we see there were green bubble, there were more buyers. Now remember, there's always an equal number of buyers, but we're talking about actually changing in the price. The buyers were more aggressive. They were willing to bid the price up, where here the price went down. Okay? And the bigger the bubble, the more they were hitting it. All right? So just a quick overview of the chart. Other things to really pay attention to is this right here. See this line right here. This is resting. It came in right about here, and then it just sat there all morning long. Just sat there all morning long until actually we did come into it. And so we're going to see sometimes a long order sits. Other times we may see, and I'm going to try and get this set up just right. Other times we'll see this right here. They had an order sitting right here. Price was above it, so these would have been buy orders. But before price really got that close to it, they pulled it. They stopped it. They took it off the books. We can call that baiting. Technically illegal. It depends on the intent. So, okay. All right. Now let's take a look at what actually happened here, and we're going to kind of go through some auction market theory. Now, today is Thursday, June 27th, 2024. This is the chart from the NASDAQ this morning, which I was trading. And so let's take a look at what happened here in the morning. Price busted out, and it went right up into this area here. Okay? What would be significant about that area? That was the prior day, PD, prior day's high. They rushed to take out the prior day high. Interesting. Okay, now let's zoom in on that. Okay, now, so they rushed to take out the prior day high. They pulled back. Was there any particular reason they pulled back here? Well, let's go back and look. And do we see anything across here? Not really, other than initially they overshot the prior day's high. They came back to the prior day's high. The VPOC, as you can see, moved once and then twice to here, in which case I mark these steps as they occur. It looks like I marked that one. Okay, well, anyway, I didn't mark these initially ones here, but that's fine. Anyway, okay, so it all centered around this prior day high. All right. Then we bust out and we go to the north. Now, bear in mind, at this date in time, we are at all-time market highs. I don't have any targets above right now. That is a problem. That's a bit of a problem as far as if I was going to continue to go long. I don't have any northbound targets yet because this isn't, we're at all-time highs. Okay. So, but let's watch what happens as we come back down. Let's see. Let's kind of zoom in on this. So price starts to come back down. Here's that prior day high. Comes up, the VPOC went up, and it came back down. What did we come down to? Well, we came down to VWAP, volume weighted average price, VWAP. Now, here we have an interesting point of something to look at. We've got the initial run of the market. Now, we've got a couple things we need to bear in mind about this particular moment in time. First of all, I see here we've got this long run up. I typically would expect about a 50% pullback, and you can see so does the rest of the market. See all these orders sitting right here at about a 50% level? So if I were to go short here, let's just go back and zoom in on that. If I were to go short here, I could. However, immediately see I got this whole wall of sellers right here, which means I'm not going to go very far before I run into resistance. I don't really want to run into resistance that soon into a trade. If, however, I really had my heart set on doing this, then I'm going to have to look over here to the left, and I've got to find some place to put my stop, and I got to look somewhere south to put my take profit. Well, I got VPOC. That's the most obvious place to put it. I'm not going to necessarily put it at VPOC. I'm going to put it a little bit behind it. In fact, notice this green bubble here. As we come down, I'm actually going to have to put it right about here. I'm not happy about that because that's a pretty big gap. So I'm not liking this, but maybe. Let's see. What have I got for south side targets if, in fact, I go short? Well, this is the big one right here, the 50% retrace. All right, now let's go back and look to the right-hand side. If this thing were, though, just to crash and burn, I've got some VPOCs from here. I've got the prior day's high, and I've got a previous day, PD, previous day VPOC, somewhere around in here. So, I mean, this looks like an incredible trade. But again, I don't like the setup. I really just don't like the setup. Why? Because again, I got this immediate resistance right in front of my face. So I got a couple things I can do here. One, I can skip the trade altogether. Two, I can wait to see that, we did in fact bounce off of VWAP. Well, if I bounce off VWAP, then, okay, where are my targets? I've got a target, obviously, right in here. At the time, I would know it here because this hadn't happened yet. So I've got a target here. So I've got a little bit of more room to go long than I do to go short necessarily. So a little bit more room to go long. And I've got this as a target up here. Okay. All right. Now, if I go long, where does my short go? Well, VWAP is my trigger line, so my short can go either right about here or right about here. Because if I go long and this thing doesn't if I go long, I'm not going to take it until after I see this bounce anyway. So I would go with the VWAP. Okay, so what happens? We come up here, we break through VPOC, we run up. Now, and we get all in this mess right here. Matter of fact, they just dropped a bomb on us right here, and with a bunch of sell orders. Now, it's not shown here because I turned all these indicators off, but if you were using Bookmap and you had your liquidity, sweep sellers, block trade kind of indicators on, this whole board lights up like a Christmas tree. And if you got the audios and stuff, all kinds of stuff going on, and you would know that there's a very good chance that this is as good as far as you're going to go. Okay, so you got in here. Now you got a couple choices. Choice one is that we see this VPOC move lower. So you could set your stop. Of course, you could always set your stop to break even and see how it plays out. Well, it wouldn't play out well. 2, you could set it just under VPOC, volume point of control. You could set it just under this VPOC. Or you could react when you hear all these alarm bells go off here. You could just flatten the trade right on the spot. So you got 2 out of 3 of these. One obviously setting it at break even because we did not make our full target. It doesn't look like it's kind of hard to tell, but I don't see any white where the last close was up in here. So I don't think we quite made it up to here, but all of the alarm bells would have gone off here, and you would have known that this thing was either going to blast through like a rocket or it was going to turn around. So you play that how you'd want to. All right, we came back down to VWAP. We also have this whole area right here of new orders that came in that are buy orders. Would I take this south? Probably not. I would sit this out. You say, well, what about going north? Could we have gone north? You could have, and then in which case you'd set your stop just below all those reds. Now, obviously, we see the result. It would have been stopped out. But let's talk about that for a minute. One of the main themes of auction market theory is the idea of, with a tight enough stop, by acting off of trigger areas. In this case here, we've been triggering off of VWAP, but sometimes we trigger off of VPOC. And matter of fact, you could have taken a short off of this VPOC. You see where we came over here and we came back down. And you could have taken this as a trigger area to either go long or go south. And if you'd gone south, nice trade. But one of the ideas here in auction market theory is we make our entry on trigger areas, keeping a tight stop. Okay, now that's important to understand that. And you say, why? Well, it's kind of because it's sort of like this. It's like lose one, make 5. Lose 1, make 3, lose 1, make 4. Whatever. We know. See, the problem here you have to understand is we don't know what's going to happen here. We don't know. It's coming into a reactionary zone. We do not know what's going to happen there. It could plow through it, as we see it did. It could bounce, or it could chop. So the best we can do is to use our kind of our intuition, make a trade, and use a tight stop that if we're wrong, small loss, small loss. Now, what would convince me to go short here? Well, for one thing, we have a lower high here than here. That's one thing. For another thing, let's see if I can get this magnified. We have this open. We're expecting a 50% retrace, most common. That's a very, very common trade is a 50% retrace. Well, it hadn't happened yet. This did not do it. Got close, but it's not enough necessarily. It doesn't, again, horseshoes and hand grenades. Auction market theory is about in the area. It's not to the tick. It's not to the tick, but it's in the area. Well, so if I'm up here and I'm thinking, well, do I go long or do I go south? First of all, we had a lower high right here. Second of all, we've got this huge line of resting orders sitting right here saying, come here. So we go short. Now let's just take a look at how much that trade, there's your best trade right there, probably. Well, this one's a great trade. This one would be a great trade. Or this one would be a great trade. They're roughly in the same area. Let's just kind of get an idea of how much money are we talking about here. Try and keep my line. So let's call that 60. And we talked about, all right, let's say we were going long up here. 60, so we'll call that 90. So that would have been 30 points on the NQ. That would have been, what, $600? On the other hand, if we're taking the reverse trade, let's see, right here to VWAP, yeah, we'd call that, what, let's just call it 80 to 60. That would have been 20 points on the NASDAQ. Not bad. Not a bad trade at all. Obviously, this trade continued. So if you had a runner, let's say you could have kept a runner going for an amazing trade that, let's see, would have taken us from about, let's just say 15 up to, we got in around here, which we said was about maybe 80. Wow, that would have been a phenomenal trade. But again, you say, well, wait a minute. How would you have known, though, that this would have turned? How would you know to get out here? You see, because this blue line's not here yet. This blue line didn't start until after we turned. So how would we have known to, well, it's not look right. It's not look right. It's look left. VPOC. There it is. Opening VPOC. See, I've got it marked on my chart over here. Migratory VPOC. Now, migratory VPOC. And I got some more over here I needed to put in as well, but still. We're moving by volume targets. And that's what auction market theory says, is that we constantly go back to areas that we felt good about, where we felt comfortable. It wasn't too high, it wasn't necessarily too low, whatever. This was a good area for us before. Now, we did ultimately say this was too low, and so we started heading back up. Well, where'd we go? VWAP. Then we go down, then we go up to VWAP, and I don't know if you can see it, but this actually goes up, it pulls down, and then it breaks through VWAP right here. Let's just zoom in on that. There it is. Up, down, up, break, go long. Stop, whoops. Stop would go, where am I? Right here. Your stop would go under this little zigzag. You go long here. Target. Now, this doesn't exist yet, so my target would actually be up here. But also, I've got this prior day high right there. Perfect target. Made it. And that would have taken us from, let's say, 60 to 70, 10 points. Okay? Anyway, we're moving around. That is the idea of how auction market theory works. We look left at what was too high, too low, but acceptable earlier. We've got prior day information, and I'm going to show you all these things. I'm going to show you all these here in just a moment. So, okay, so there we are. There's the opening chart kind of explaining things. Let's move on. No, I got to get my thingy back here. Okay. Now let's, a quick moment. Which tickers should we look at? Which ones should we consider? I want you to notice all these big order zones on the NQ. There's a lot of them, okay? Those give us some really good targets in addition to our targets over here. And one thing let me point out as well, this column, this column right here, excuse me, sorry, I want to talk about this column here, is the session volume profile. And I want us to note some of these bigger areas. Sometimes we might want to mark these on our chart. See how that little bulge right there? We might want to mark some of those because that's telling us those were heavily traded areas as well. But anyway, back to this here. We've got, you know, lots of historical and all kinds of information here to give us price action. We've got levels here. You know, we got some short-term or, you know, levels over here. This is a great place to come. NQ is a great place to trade. And I will be honest, I used to be scared to trade the NQ. I was flat out scared to because it just moved so much. And so I traded the ES and crude oil because they were slower. Fine. But when I combined auction market theory with Bookmap, because I had Bookmap, I didn't understand it, it didn't make any sense to me. I went to the bookmap.com site, started doing their education, ran into the videos by Tom B. I'll show you a link to that later, where he taught auction market theory. And when I started looking at Bookmap, all of a sudden I saw auction market theory in it. And then all of a sudden I didn't have a problem trading NQ anymore. Now, I'm not recommending that you go after NQ and jump into it. I'll be honest, you know, spent a long time on paper figuring this out. I mean, not a long time, 2 weeks, maybe 2 weeks. Once you kind of get it, it just kind of clicks. It just kind of clicks. And I've made some fantastic trades since then using the NQ, and I'm not intimidated by the NQ anymore because I can look at the Bookmap, see, and look at the auction market theory concepts, and I know, you know, I know where my stops are going to be. I know my profit targets and all that kind of stuff. It's great, absolutely great. You know, so let's continue here. Here's the ES again. Nice heavy targets we can see. We've got a lot of target historicals here that we can work with. We've got levels on the order book. We've got some levels. See, here's a high volume node. Here's a high volume node, temporary. Here's one kind of here and here. This is a zone kind of thing down on the bottom right. So again, this is fine. Here's gold. You know, what do we do here? We don't have much on the order book. We do have some session volume profiles. We do have VPOC, but there's not a lot of history in here. Now, I'm not saying you can't trade it. That's not what I'm saying. What I am saying, though, is that this is probably going to be more difficult to work with if you're using you're not going to be able to use so much of the Bookmap as you'll have to use just pure auction market theory. This is too high. This is too low. We're back to that same high. We didn't run it. We set a new low. We tried to rebound, but we didn't take out that high there, so we're going south, we believe. But, okay, maybe VWAP's a target down here. Why would I come down here? Now, as you can tell, I haven't filled in my notes column, so I don't know what may be there on that. I just grabbed this snapshot just to show the Bookmap portion of things. So you're hindered a little bit here trying to trade the gold futures versus, let's say, the NASDAQ or the ES, where you've got auction market theory going on and Bookmap levels both working at the same time for you. So what we're going to do now, there are two ways to populate Bookmap with your levels. One is you can put these in by hand, and I'm going to show you that. Another way is to build a spreadsheet, which I will do very quickly at the end. But here's the thing. Here are the things that we want to track. And I'm going to just pause this here for a moment. I want you guys to make sure that you take a good screenshot of this. If you're interested in market theory, you want to make sure that these are the things that you want to put into your Bookmap. If you're not using Bookmap and you just want to use it on your trading platform like Trade-O-Vate or something, these are still good places to put it. We are going to get into a lot of volume profiles, and you're going to need some kind of tool to do volume profiling. Maybe it's Thinkorswim, maybe it's TradingView or TrendSpider. I'm going to use Trade-O-Vate with some plugins, which I will show you about as well. So, okay, we're done with this screen here. Just to pair up some of the terminology here. 10D, let me just zoom in on this. 10D is the 10-day volume point of control. PD is prior day volume point of control. Past 3 days. Prior day close, prior day high, prior day low, pre-market VPOC, pre-market VPOC high. Remember that a VPOC, that volume profiles have what they call the value area. And we'll look at that, and we're going to mark that as well. So we got the high, the low, then we got the actual high and low of the pre-market itself. Now, some people even go further. They'll, for example, mark the midpoint of the pre-market. You can do that if you want. Some people will mark a few higher highs and a few lower lows based on prior days, and that's fine. No harm with that either. But that's the core stuff that I am after. Okay, now before we go to the live session part, I want to give a quick shout out to Tom B over at Bookmap. He's the Bookmap. He's the one that did the video. Here's the link to the video. You can go to this YouTube video right here, and he goes into way more depth than I do. And so you can learn a lot from that, from watching his video, if you really, really, really get into auction market theory, because I'm just hitting the surface of it. Not that it's a PhD level study material necessarily, but I'm doing a little short video here, and he's got a whole series of videos on it. So just kind of bear that in mind if you want to go see that. All right, so let's get to it. All right, I am going to start by I'm going to bring up Trade-O-Vate. I'm on my demo account, and I'm going to here. So I've got my spreadsheet. We're going to mark out the ES. Now, I did not trade the ES today, so I don't know anything. Let's clear all the drawings just to make sure. I don't know anything about what happened. I traded the NQ today. I did not trade the ES, so I do not know what happened with the ES. I mean, obviously, I know that if you're looking at this, days, weeks, months later than after when I recorded it, in the morning session we did, I know that both markets went up. They both did go up and set, highs and stuff like that. Beyond that, I don't know. But, you know, I don't know what happened as far as within ES because I didn't trade it. All right. First thing, I am on the daily. Now, there are going to be 3 studies that you need to load on Tradovate for this to work. And those are these 3 here. You can get these from the community indicators. You know, when you come over here, and I'll just show you. When you come over here and you go to add an indicator, down here is Explore Community Indicators. You're going to go there and you're going to search for Tiki VPOC, Tiki VWAP OC, which is, anyway, and VPOC bar. These 3 right here. I'll leave that for a second for you to screenshot or write down or whatever. Okay? Now, so we're on the daily and we got those 3 studies loaded. Now, what I want to see here, and I'm going to mention a couple very nuanced steps. Now, you know, this is kind of, whatever. All right. What I'm going to do is I'm going to add a volume profile. Now, I'm not going to count today. I'm going to count because today is still, you know, if the markets are still open, the day is still moving. So I'm going to come back here, and I'm going to start with yesterday. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Voila. Okay, let's start filling out our chart here. See this yellow line right here? That is the 10-day average volume point of control. That number, let me just set this up so I can do this and talk at the same time. Go away, stupid thing. That number is 5533.5. I want to look at the prior day VPOCs. Now, again, this is our current day. So here's my prior day right here. 5541.75. Prior day. See, by the way, you see these right here? These little gray lines? That's what the VPOC bar does for us. That study up here, VPOC bar. See, it puts a bar on every one of them. All right, so let's see, we've done 1, now we need to do 2. So here's the current day. We've done this one. Do this one at 5531.25. And then we got one down here, 5526.75. I've got my little doohickey where you turn on the data box right here. I'm going to hover over this prior day. And I want to put in the prior days, close, low, and high. So we can see as we look in the data box right here, I'm going to hover over this candle, that the close was 55, and this may be too small for you guys to see, I don't know, but the prior day high, 5555 even. Prior day low, 5515.75. Now, so we've done our VPOC stuff up here for the prior days. We've done all our prior days here. Now we're looking at the pre-market things. So I'm going to get rid of this. I'm going to switch to the 30-minute. actually already after market close. But let's see. Here. Okay. Day's 27th. So again, I'm in the 30-minute now, pre-market. So I want to go to the market open on the 26th, which was here. Now watch what I'm getting ready to do. I know you can't see this way down here at the bottom necessarily, but it says 9:30. That is wrong. That's 9:30 to 10. That's 9:30 to 10. I'm going to back up one candle where it says 9 a.m. because that'll be 9 to 9:30. All right, just a small little nuance thing to consider. And let's take a look. Now we have our pre-market information. Some of this, obviously, you may be able to build in a few minutes before market, like the low or maybe the highs and things like that, because they're obvious. Some things, though, like the volume profile, you just have to wait until the market opens to get it. Okay, so let's just kind of look on this line right here. This, you can see this yellow line here. This is the overnight session pre-market volume profile, and it was at 5535.25. The value area would be the profile high, is this top of this yellow line. This yellow zone is the value area and tells us where 70% of the overnight pre-market trades occurred. So I'm going to mark that. That's 55.41 and a quarter. And I'm going to mark the low. This yellow line way down here, it's hard to see. 5530.75. My pre-market low is this candle right here. And I'm just going to cast my eyes over to the data box where it says 5520 even. And our pre-market high, oops, let me get over here. I'm going to open this up. And our pre-market high here, oops, I got this in the wrong place over here on the left. That was the low. Here's the high. Was this candle here. If I look in the data box, it says it was 55.43. Even. Okay. Now I have my numbers. Now let's bring up Bookmap. Now I've set Bookmap into replay mode. Now I'm going to show you how to do this manually first, and then I'm going to very quickly show you how to do it automatically. Well, not automatically, but y'all know what I mean. Not totally magic, but I am going to show you how to do it through a spreadsheet instead. Just kind of close this up. All right. This column here, I'm doing a replay of today. It is set at 9:28, which I'm Eastern time, so 2 minutes or 1 minute or whatever the market opens in this replay. So what I'm going to do, I've written my note, and this could be a sheet of paper or whatever you want to do. I'm just going to click one of these. By the way, let me just go through this. What is this column? This column is called Custom Notes. Custom Notes, right there. So you add a column, and you change it to be Custom Notes. So I'm just going to click anywhere in here under Custom Notes. Change the price to, and what I'm going to do is I'm going to start populating these in. I'm going to put a few of these in, and then I'm going to jump over 5533.5, and I'm going to make a note down here that this is the 10-day VPOC. And I'm going to click again, 5541.75. was a prior day VPOC. And you see they're starting to populate in. We'll do a third one. Then I'm going to show you a slightly different way to do it. 5531.25 was a, oh wait, 31, no, I haven't put that in yet. Prior day VPOC. Okay, yep, there we go. Boom, you're there. All right. So I can manually populate it that way. Now let me show you a different way. Now this is a little more techie, nerdish kind of stuff, but it is a way that you can do it. All I need to do is just to put something in here. So I have something to save. I can't do a totally blank one. Then I can right click on current notes and I can export them. Now once I export, it's going to bring up a directory, and it's important to note what this directory is. Come here. Come here, you. Note that it is under My Documents or Documents, Bookmap Config. That's where we're going. Okay. Now, if you're Apple, I don't know. I don't know Apple all that well. I need to give my file a name. And so I'm just going to call it Bullish Bears -ES because we're marking up the ES. And I'm going to save it. Okay, now what? Okay, so let's open up a thing here. Let's go to Documents, Bookmap, Config. Here is my file. You'll notice that it has a comma separated value, .csv. This is a spreadsheet. It's a text file, but spreadsheets understand it. And in my case, it's already assigned to Excel. So let's just open that up. Here it is. Hang on, let me get it so you guys can see it. There. All right, I'll try not. Okay, there we are. This is that file. And you can see that it is populated. Remember, I said you had to have something in a field. Well, these are those three numbers that I entered. And you got different colors and alignments, whether you want a notification when it hits and all that kind of different stuff. So what I can do is I can just carry this on down like that. And maybe I'll just go ahead and fill in from my notes the rest of these kind of things here. So let me open up one I did earlier. Okay. So here I've already filled it in. I've already filled this in, and the name of this file is, well, we'll go ahead and save it again. But you see I've got all this prior day VPOC and prior day and pre-market and all that kind of stuff there. It is important to understand that, for example, you may not have, you may not have pre-market VPOC yet. Give me a minute. And you say, okay, well, I'll just save it with that fit. No, you cannot have a blank. You cannot have any blanks. If you can save it with a blank all day long, but the moment you try and import this into Bookmap, it will just give you an error message and say null fields and all that kind of stuff. So you have to have something there. If you don't know what it is for right now, just put in a 0. Oh, come on, quit doing that. Just put in a 0 if you don't know. for right now. That way it'll at least bring in something. Okay? All right, now, that being the case, I'm not going to save that, and I'm not going to save that. We're going to come back over to here, and I'm going to clear out my manual entries from, earlier a moment ago, but this could have been yesterday's notes or whatever. And I'm simply going to right-click on the header. I'm going to import these notes, and here they are. ES test, I did that earlier. Voila. There they are. So you got multiple ways that you can do this. And there's even ways in Bookmap to put these up onto a web server so that other people can get them as well. So, any rate, all right, so here we are. Let's just take a look. We're running long on time here. I want to run through this chart very quickly. I'm going to run this at high speed. We're just before pre-market, cash session, the regular trading hours opens. I've filled all this information in. Here's my purple is my VWAP, yellow is my VPOC. We see we've got some hot zones up here and up here. If I crunch this down a little bit, what else do I see? Some more up there and so forth. Okay. All right. I'm going to open this up a little bit like this. Now, like I said, I'm going to put this on fast speed. Resume. Go, 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 go.
For sweep sellers. ESU for absorption sellers.
I don't know if you guys can hear that or not.
Block sell.
Actually, maybe it's a little loud on my side.
ESU for sweep sellers.
Turn that down a little bit. Prior day VPOC. Got some hot order line right here. Let's see what happens. Boom. Prior day high. Maybe I better slow it down just a little bit. Like I said, I don't know if you guys are getting this desktop audio where Bookmap is talking to me and chirping and stuff, but anyway, here we are, another hot line. Prior day high. Ooh, chickened out. Here we are coming down to VWAP. Here's a prior line. Boom, short. Prior day VPOC. Prior day low is the target. Oh, look at there. Right there. There was, I would have taken that trade short right there in a heartbeat. Okay, I'm going to turn off this desktop mixer here about Bookmap talking. Again, I'm not sure that you guys can hear that or not, but at any rate, it's just going crazy in my ear. All right, so where do we come back to? We came home to Mama. We came back to VPOC, right? That's where everybody agrees that that's the most fair price. Here we are running back up to VWAP. Okay. Look, we're breaking north. We got this line right here, big magnet, going back for prior day long, prior day high. Nope, stopped out. All right. Let's see. If we break this, I say we come back down to VPOC and way short. All right. A little bit of heat right there. And this is the part you hate, right? And not quite there. Okay, stopped out. But, after a long run, let's just pause that for a second. Where did we come to? Now, understand, I'm running this at 32x speed here. Let's look left. What do we see? Well, we kind of see this area here. We came to pre-market low. We've got several things, several targets right in here, so it makes sense. It hit a target. It came down to pre-market low. Hit a target. We should have been ready to move our stop either to break even or maybe rush up behind it and try and capture some of the profit. Let's see what happens. Let's continue. A little bit more. Looky there. Now, could we have seen this here? Well, what happened here? We went up. We came down right to VWAP and then bounced off. Well, that's a long. There's no question. That's a long right there because that is a break, retest, bounce, or called a Busby, as Sig likes to call it. There it goes. What's our target? Prior day high. Let's see. Do we get there? Yep, right there. Right there we are. Let's say we got some runners and we want to keep going. Where are we going? Right in here. Let's see what happens. Nah, chicken. Maybe. Remember, we're still long from VWAP here. At this point, I would move my stops up to here. Another thing is, the minute I hit this area right here, because that's such a hot zone, I might just flatten myself immediately right there. I mean, because look at this. That was 46. Well, let's just call it 47 to 55. That was 8 points. That was 8 points on the ES. 8 times 5? $400 a contract. You know? So, not bad. Not bad at all. Anyway, folks, I am going to wrap this up here. I hope you've gotten something out of this talk here as we've gone over the auction market theory. And, like I said, I hope that you did learn something from it. And I'm going to actually... where I learned it. I'm going to finish off here. Again, a big thank you to Tom B. over at Bookmap for doing a lot of educational videos about auction market theory. And folks, like I said at the beginning here, I'm a member of the Bullish Bears community. If you're not a member of the Bullish Bears and you are looking for a good adult, not adult, I don't mean dirty, I mean there ain't a bunch of children running around posting stupid GIF files and all that kind of stuff in the Discord all day long and blah, blah, blah. And, the Bullish Bears is a very mature, maybe that's the better word here, a very mature group of traders. And I think you would really enjoy some time to come hang out with us, learn a little bit about us. BullishBears.com. Again, I'm not compensated in any way for any of this here. It's just a good group of people, and I'm glad that I found them. With that, I am Marziti, and I am signing off. I wish everyone to have a great day. Y'all be good. Later. Bye.